Hello guys, welcome back to a new video and to a new episode of Backtesting and Chill. So you know the drill, we're gonna choose a random day from here and we're gonna take it to FX replay and we're gonna backtest my strategy, my easy scalping strategy. And let's do the 9:30 strategy today. It's been some time since I did a video about it. I still trade it from time to time when there is a clean setup, and in my opinion it is one of the easiest strategies there is. It has an edge, meaning in the long run you're gonna make money with it. Alright, you just have to stick to the plan and just trust the probabilities. So let's get right into it, and there is no need honestly to watch my detailed video about this strategy. You can just follow along with me and you can understand it is that simple. So let's choose a random day, let's not waste any more time, and let's go to 2018. Right, let's expand the period this time, and this one is gonna go here. Beautiful. I'm sorry. Alright, beautiful. Let's get our date, and it's gonna be this one. Let's start the session. Account balance 10k. Let's do NQ this time, and alright, so the strategy goes like this. It has three main rules. Alright, first of all, let's talk about some ground rules or the foundation of it. First of all, you're gonna use the 9:30 open to trade that volatility. Alright, you can only take trades at, I would say, from 9:25 to 9:40. Right, you either position yourself before the volatility or after the volatility. You can use the 1 minute time frame, you can go all the way down to the 15-second, you can use the 2, the 3, but it is a scalping strategy, so you don't want to use the higher time frames. Alright, and you're gonna aim for 1 to 1, 1 to 1.2, 1.3. Alright, if you want to go with higher RR, that is your job to optimize it that way. Alright, and the rules for this strategy is basically you want before 9:25 you want to identify the trend, whether we are bullish or we are bearish. Alright, and that's the first rule. The second rule is you want to suppose that we are bullish. What you want to see is you want to see a sweep below a low. Alright, this sweep can happen at before 9:30 or at 9:30 or just after 9:30, so around that period. That's the second rule, is you want to see a sweep. Now the final rule is that you want to see something gets violated. So we are bullish, now you want to see something bearish gets violated, something around here. Right around this area. It can be this high right here. So if, for example, the break of this high is gonna confirm the break of structure, you want to place a buy stop here, and since we're gonna have volatility around that time, price will tap you in and continue to your TP or to your stop loss. Again, it can have losers, it can have winners, but we're gonna have to trust the probabilities. Alright, so that's the whole strategy. When we have a range, you really don't want to participate unless we have some specific criteria. So suppose that this is a range, we don't have a clear trend. Maybe you want to see a sweep at the bottom of the range and you can take price to the top of the range. That's also a way to use it during range days. So that's the whole strategy, and now let's get right into it. First of all, let me play with the settings here. So the next day open setting is gonna be, instead of 9:45, let's do 9:15. All right, beautiful. All right, I guess we are ready. So let's go to next day open. All right, beautiful. Let's forward price a bit. So preferably you want to see the sweep at 9:30 or after, because you might have a minor sweep at around this time and then the real sweep happen at 9:30. So you don't want to get caught. All right. And if we look at the higher time frame, we can identify that we are bearish. All right. You don't have to look at the 1 hour and see the daily and say, all right, we are bullish. No, you're scalping, so you can identify levels, important levels that we can reverse from. All right, we have this, we have this. These levels can definitely trigger a reaction. All right, but I'm not gonna work with this whole trend. I'm just gonna work with recent levels on higher time frames. And let's continue to the 1 hour, all right, or the 1 minute. Let's move price slowly. This is the reaction that we are talking about, and if we have something that we can violate from here, we can definitely take the buy, since that we are bullish overall, but this is how you use it mainly. And here you want to ask yourself, all right, we have a sweep here. Now, do we have something that if we violate, we can trade to the upside? The sweep happened on a low, that means that you want to take a buy, of course. You don't want to, it doesn't make any sense. If we sweep a high, you want to take price to the downside. So here we swept that hourly low, and we can definitely see a move to the upside. And I believe, from what I can see, is that this high is important. If we close above it, we can definitely, or not close above it, if we trade above it, you can definitely see some move to the upside, since this is a higher time frame high, and maybe something like this, right? So let's set the buy stop. We don't know, the price might continue to the downside, so be careful here. See, if not, you can just remove this, but you don't want to be, you want to be very quick here. Again, you're dealing with the volatility. All right, so we don't have a setup this day. All right, so that's how the strategy works, even though there is no setup. Now I'm gonna start moving price fast, and when I see a setup, I'm gonna stop. This way we can take a lot of setups together and explain to you the logic afterward. All right, so let's get started. Alright, the next day we have a beautiful win. Alright, so if we go through the rules, like I said, you want to determine the trend. We are overall bearish, like this. Alright, you can clearly see it. That's the first rule. The second rule is that we have a sweep, and this sweep happened at 9:28, so that's what you want to see, the sweep. Alright, not at 9:20 or something. You want to look for a sweep that is very close to 9:30. Alright, and now all you have to do when you have a sweep is you identify the level that if we take, we can trade to the downside. And in this case, it was this one right here. You might ask, why this one? And if we go maybe to the 15 seconds, is this the 15 second? No, this is just the 1 minute. Something is wrong with the data, because this is the 1 minute and then this is the 15 seconds. Doesn't make any sense. But this is the 30 seconds. Beautiful. You can see we have this block. We have a couple of sweeps below it here. That's a strong block. Alright, we traded to the upside and then we violated that here. You might call it a breaker, some call it a structural break. Doesn't matter. What matters is that you know how to identify that level, and it doesn't have to be 100% every single time. Just want that level that you can base your trade idea off of it. Alright, so let's move on to the next day. Alright, so on the second day, Monday, alright, it was another win. Again, if you can go through the process one more time. And guys, this strategy doesn't have, I'm not gonna lie to you and like those YouTube gurus, it doesn't have a 90% win rate, alright? But it does have an edge. And that's something very extremely important to make it in these markets. Alright, that means that in the long term, in the series of 50 trade, you're gonna make money. Alright, this is not something that works for some time and then stops. You can have winners, losers, and break-even days, but if you stick to the rules, eventually you will make profit. That's something that I can promise you if you execute exactly like I show you. So again, we want to go through, we want to identify the trend. I think this is very clear that you are in a downtrend, right? If we go to the 1 minute also, right? This is a pullback. You don't have to look at the left and say this is a major reversal zone, because again, this is still the downtrend, alright? And this is a very big zone in order for you to start speculating the reversal from here. You can expect a reaction from lows, right? That's something that I talked about a lot. This can give you a reaction. This zone, you don't know where exactly the reaction is going to happen. Alright, yeah, it can definitely give you a reaction, but you don't know exactly where. Not like a low. So you just keep with the current trend. And the second rule, you identify the sweep. The sweep happened on the 15 second, and you can see also that here on this time frame we took this previous high of the candle into this imbalance beautifully. This is the 30-second view. You can see the sweeps better here, right? Multiple sweeps here and here into this imbalance. We closed all of it, and on the 15 second I just dropped down to identify the level, which is this one, right? This low here, and we broke it, took some drawdown, and then eventually go to TP. So that's another win. And you can definitely again optimize the RR. So you can see from the 2 trades we went further than 1 R. Alright, you can definitely collect data about this and optimize it for better RR. Alright, see which one is the best. You can also use the drawdown rule to see if you can reduce the stop loss a bit. You can use or base the trades of a higher time frame imbalance, just like I used here. Alright, this is just some ways that you can optimize this strategy. You can be creative with this. Alright, there's 100 ways to optimize this strategy, but not always will work. But this is the beauty of it. You collect data and see the things that works and the things that doesn't. Alright, let's continue to the next open. Here I can identify that we're starting to go bullish. Alright, this is just an initial thought from the 1 minute. We were arranging here, we did it to the downside, we cleared the lows, and we started to form a bullish trend. There is a sweep here, and we can consider this level to trade or to base our trade from it, something like this, right? You can see that we never traded above it, so we need to remove this. You can go to the 1 hour to identify levels. We see that we are trading off an imbalance, hourly imbalance, and there might be a target here. This is just basic higher time frame market structure, and we were also rejecting from the EMA. EMA is a very powerful tool, guys. It aligns beautifully with structure. It gives you that extra layer of confirmation. Let's go to the 1 minute and see if we have something here. Yeah, so that's the level that we hit, and the play was actually to the downside. Here's the imbalance, but you can see that that tiny confirmation of the lower time frame saved us from a loss. All right, that a high that we identified. Let's go to I think I missed the setup here. This was a clean setup. Entry from here, or I put my entry from here and my stop loss here. We missed that, unfortunately, but let's see if we can get another setup. It looks still that we might have a chance. Usually after this huge move to the downside, it is followed by a slow pullback like this. That's what I learned, and eventually we can go all the way to here. This is the data low, right? Maybe this is, let's check the calendar. Wednesday. Consumer price index. Yeah, this was the news. Let's take a look at the higher picture. Because the higher picture can give us a good idea whether we're gonna attack that news low or not. But here we are in a range, right? Clearly a range, but we did take the top of the range and we rejected heavily from it. If we are bullish, this is not what you want to see. We might attack the low of the range here, or maybe this portion. Although we are bullish, but still this is a range. Let's drop down to the 1 minute. This looks like a sweep, right? Let's go to the 1 minute. There is nothing here to put our sell stop. 30-second, we have this imbalance. We can definitely put our sell stop below it. Although I like for imbalances to be broken, and we can easily just wick below them and then trade to the upside. That's possibility. On the 15-second, same thing. Alright, we did close below it here, so we can definitely look for short, and we need to manage this, and we need to manage it something like this. Let's place the order. It's gonna be a market. Alright, a break even. Alright, beautiful. That's a third win in a row, but again, this is in a good day. In a normal day, you're gonna have a win, then a loss, then 2 wins, then a loss, and followed by 2 wins. Alright, whatever. But again, this requires some discretion, because this is a big imbalance and it needs to be balanced, and we are topping at that top of the range, right? So you can definitely use discretion here. Now let's go see what's gonna happen. Yeah, exactly, we took that data low, right? You can see here. Let's go to the next open and see what's going on here. Let's go to next day open. Yeah, so this was beautifully played, exactly like I predicted. So I'm sorry, that was the top of the range. We took the highs. This is not a bullish closure, this indicates weakness, and we attacked the low of the range, right? So this was aligned beautifully. Here also we need to note the EMA is touching price here on the 1 hour, so I want to keep this in mind. Let's go to the 1 minute. We are bullish, right? We just took the bottom of the range and we are seeing this bullish reaction. We have a sweep here. This might be the reaction from the EMA, and now we can move to the upside. The EMA will have, a lot of times will give you a reaction, but it doesn't have to be a reversal. It can be just a short one and then continuing later on. So here what do we have? We have the sweep. Let's Alright, we have a chance to position ourselves before the 9:30 move. Alright, so we might take an entry just here with a stop loss of here, and we put 1-to-1, that if price will give me a small pullback. We violated this zone, right? Let's see what's gonna happen. Let's do a limit this time. Let's move price slowly. Alright, we need to go break even right now. Beautiful, another win. Alright. But you can see, guys, that I use basic market structure. I'm not relying, or I'm blindly trading this strategy. Alright. Again, price went further, so this is definitely can be optimized for greater TPs. But again, you want to incorporate some higher time frame structure and context in order for you to start taking this higher time frame or bigger risk to rewards, because bigger risk to rewards with this strategy will come with a higher time frame alignment. When I say higher time frame, all I mean is that if you're basing your strategy from a higher time frame low or high or a point of interest, that reaction from it is going to be huge on the lower time frame, and you can capitalize on that to take a good RR. That's it. And you can see the range is still in play, and the EMA did exactly what I predicted, only a small reaction, right? Because it is not aligned with structure this time, or no, not aligned with structure, but you can see that we took the bottom of the range, we start trading to the upside, we hit the EMA, right? On the left side, what do we have? We have this imbalance, alright? So this is exactly what I talked about in one of my previous videos. I said that when you have a big point of interest, right, maybe this imbalance, you don't know exactly from where they can offer a rejection. So imbalances, point of interest, a block or something, they can definitely offer a rejection, not necessarily a reversal, but a rejection, especially if they are not aligned with the higher time frame, right? They are at the opposite side. So the EMA can give you that area that you can expect a rejection from. So in this case, it gives me this area, and you can see from this candle high to this candle low, we have that rejection, and then we continue. Of course, you can have a good idea that if we're going to continue or not, based again on the higher time frame, right? So let's go to the last day, right? Let's see if we're gonna take a loser or a winner, or if we're gonna get a setup at all. Let's check the 1 hour once again. Beautifully see the EMA. You can see the EMA once again. Beautifully identified this, alright? Although it is not perfect this time, but you can definitely use it in your strategy and in your reading of price. And this was yesterday, right? We traded all the way to the top of the range. It doesn't necessarily mean that we're gonna take it. This is all, this area, excuse me, this area can be considered the top of the range, not this one, this one. When price hits this, you don't want to keep buying, alright? So price is reacting from the EMA. Let's keep this in mind. We also reacting from this imbalance. Let's go to the 1 minute. The 1 minute, we are giving this bullish structure. The EMA is somewhere around here, giving its support, and overall we are bearish. So let's see what's gonna happen. A bit tricky in my opinion. Start trading to the upside. We swept this. We continue. This is definitely bullish. We are seeing closures here, right, instead of sweeps, and this zone is still holding price. You can see we found support from it once here after we broke it here, first touch, and the second touch, right, this high, it gave a reaction, and this one, and now we are trading to the upside, right? So looks like that imbalance here and the EMA somewhere around here are definitely pushing price to the upside. Let's go to the 1 hour and see what's going on. Beautiful. This is just beautiful. You can see how everything is aligning. This one offered support. We traded to the upside. The lower time frame give us no confirmations to go lower. Everything was suggesting bullish, and then we traded at the top of the range, and you can see here, top of the range, and again the top of the range gave us the reaction just like it happened here, and we're gonna see what's going on. And I'm definitely interested in what's going on here. Let's move price slowly. The EMA once again, you can see, and this is the zone from this low to this high. This is a block of a higher time frame. If we go to the 15-minute, we can see it clearly. Beautiful. And that block gave a reaction, but on the 1 hour you can actually know, again, the precision is just beautiful. You can know at which level this block is going to give a reaction, and it was at this level, right, the bottom or the lower half of that block. We have a reaction from it here, you can see. Beautiful. So you can see that even if a higher time frame imbalance or a zone or a block fell, right, because they are not aligned with what's going on the bigger picture, they can still give you a reaction, and that's just gold, because you can scalp that on the lower time frame. All right, or you can just stop trading if you're trading in that direction, and then you face a block or an imbalance, higher time frame imbalance. You can expect a reaction from it. Just take it easy then, and just wait for that reaction to pass, and then keep trading to the downside or something. So I believe that this is the end of the session. I hope you liked it. If you have any other questions, you can always DM me in my Twitter account or leave a comment down below, and I'll answer you as soon as I can. Now, happy trading and good luck.